All right, let's just do a quick trade session recap. This is technically a backtesting session because we're going to review the trade through a backtest, and it is essentially the highest quality position that I identified through today's trading position. So today's date is Thursday, the 29th of January, 2025, 2026, and the premise of making this is because we've made this observation. So it's something that I've now added. It's not mandatory, but it's something that I feel like will help me towards finding the purpose of the entire trading session to pinpoint the one massive highest quality trade idea that I want to play out. Because on previous days, we've seen that we want a narrative, but then we see the narrative play out with not quite the right validation or the right time frame alignment, and then we don't really hold out to see the actual thing play, and we don't expect it to play out again. So now I know that every single requirement will for sure play out, but it will take a longer time for it to play out. Now, in this case, what I wanted, everything in my checklist got ticked. We had the current range, we had the liquidity areas, we had the mirror on price, we had the narrative on the 4 hour, because the 4 hour was what opened up with the no bottom wick, and then we had the break of the lows or highs. So if we dissect this trade position, we actually started off a little bit later on the charts when we arrived. And what we first saw coming up to basically NYSE is the closest candle that we had to wait for was the 2 p.m. 4 hour candle open or under didn't have a bottom wick. So my initial reaction when we've identified range, identified lines, is that I'm expecting price to hunt back to this area at 5509, 5508 for price to grab a bottom wick. And we've seen it happen before. We've seen liquidity areas get tapped. So I wasn't too sure if I should take a wick entry or if I should wait for price action to come all the way down. But when we look at dissecting just the historical data from the left, we typically see the mirror of a massive range, which is to the left of our screen, this area here. So we've had liquidity grab, price action comes up. We've had liquidity grab, price action should come up. And we've had the grabs in this area before. So therefore, the next stage of what we're expecting is rejections at this area. So if we can align and build context across all of the time frames, you've got the daily bias, which is technically bullish. You've got the 4 hour time frame that has no bottom wick, but we think that it will come down, hunt the stops, and then give us an excuse, give us a rejection, and a confirmation of a closure above. Now, this is why I didn't get in. If we look on the lower time frames, like the 1 minute time frame, you had NYSE open, it came all the way down, it validated you, you had a pullback on this 1 minute time frame candle. And I was really hesitant on getting in because I didn't know if this closure below the range meant anything for price action to start coming down, right? Now, on this premise, I'm not too sure if I should have set a either what's it called, a buy stop, or just have a manual execution of what I think is the break of the highs and then the stop loss right below the lows. That would have been a really, really good execution. And if we illustrate that real quick on this current candle, if we had, let's say, there even the rebreak of the lows here is 86 pips, price action comes up, you're looking at a 2.81 ratio. That is a really, really nice, neat risk to reward. But what I can't forget is the possibility of price action coming down, because let's say we don't have any of price action right here. We don't know what price action is going to do. When we see price action start coming down, we're looking at the left of my screen and we're seeing where is the logical points that price action should start to reject. We've seen price action come to this area. We've seen price action come to this area. What does price typically do when it mirrors these areas? Well, price action at this area has come up all the way, validated this area. So your next point of reaction, once you've come down on this cycle, is to tap into this area. And now you couple that bias and you couple that analogy with your time frame alignment with the 4 hour time frame, then you've got your current range that you're currently trading in. You've got the liquidity area here. The mirror on price action is what we've highlighted, which is exactly the price point that we want. And then we've got the narrative been built because now you've got all the time frames aligning, including the 4 hour coming down. So the only thing that I needed to do is, yes, you've broken the lows because you've got given that satisfactory bottom wick on the floor. I now need a confirmation on the lower time frames to tell me I'm ready to get in. So when we saw price action come down, this is the point in time where I'm like, right, I'm looking for a position. Then came the 1 minute time frame where I wasn't so sure. So now the focus is well, do I need to wait for a candle closure or can I get into a wick entry? Maybe not on this candle because yes, this candle is I'm a little bit uncertain on, right? But can I still get, if you've got a bottom wick being grabbed, a break of the highs for price action to start coming up, and then utilize either break of the lows here and give it a little bit of a buffer point, or continue with your normal risk to reward and take that risk? I think this is where we have to be very specific with the way I'm looking at entering candles. And this is also where we have to focus the most on to make the strategy work the best. It's an absolute A plus setup. Unfortunately, I did miss it because when price action came down, I was expecting there could be potential for a retest of the lows. And if price action retests the lows and retests here, you'd be looking at getting in. However, the 5 minute time frame at the time didn't give me a very solid candle. Although, yes, you gave me technically a bullish, I wasn't so sure of getting into a wick entry at this time. And I was actually waiting for a rebreak of the highs on that current 5 candle because as you can see what happens when price action pushes up a little bit further, it completely validates you to go down because your hour candle opened up and the hour candle was extremely bearish, extremely bearish. And even though I was looking for potential bias because of this, look at what happened on price. We started taking the dump, and that's where I decided to call it for the session because this is a massive retracement. And if we look on the higher time frame, the massive retracement is going to be mandatory. You've got gaps to be filled in the market for sure. And as you can see, you've just got a very healthy extension of a bullish trend. You're bound to come down to grab liquidity. So if we look at the charts afterwards, we don't really know what's going to happen now. Okay? So there was a little bit of a backtest breakdown of what we wanted in price action, but the system is as follows. We know exactly what we need to do in terms of executions. I know exactly the levels that I want in terms of liquidity pools. Now, the question of execution is dissecting where is my specific entry point and how can I identify it. Instead of having a massive stop loss of 261 pips, I can make it smaller if I really wanted to on the lower time frames, if I wanted a really good entry. You have an entry here, you have a rebreak of the highs, you can just take the rebreak of the lows, something that isn't so wide in terms of the stops. I think the stops that I had on my initial play was 5491. And the reason I had 5491 is because there was the last lowest wick, I think it was here, that price action tends to grab. Yeah, it's pretty common that price action comes down to this area before pushing up. So that's the last kind of chance that we have on price. So if we had this as a stop loss, this isn't terrible. It's a 1.42, roughly around this area. Price action pushes up. You've got a 251 pip win. That's exactly what we're expecting. So there's a little breakdown of Thursday's trade position. And I suppose the title for this, or the objective of this, is to find more of a specific system and approach on the charts for your entry position because the system works. We know the system works. I'm very happy that the system works. It's just now piecing everything together, honing in that skill set again, and just remaining focused. Don't push too hard on this because it's not mandatory. If you'd rather feel safe of just taking closures above, then do that. But if you really wanted conviction on the charts to really take advantage of every single position and become more consistent on a more frequent basis, then this is definitely something to add into the skill set and something to focus on so you can find some answers to then open up more opportunity to enter trades.